Welcome back to XRP Insider, your trusted source for the latest crypto insights. And today we're diving into a story that has the entire XRP community talking. Because Ripple's CTO Emeritus has just revealed something that might surprise a lot of people, and at the same time raise even more questions about the future of XRP, the market, and smart investing in general. So stay with me because this is not as simple as it sounds, and there's a deeper layer here that most people are missing right now. So let's start with the headline itself because it grabs attention instantly. Ripple's David Schwartz has revealed that he is now effectively all in on XRP and Ripple equity. And if you've been in crypto for a while, you already know how rare it is for someone at that level to openly talk about their personal holdings, especially in such a direct way. But what makes this even more interesting is that Schwartz himself admitted this situation wasn't fully planned. It wasn't some master strategy. It was more of an outcome that developed over time. Now here's where things start to get really important for investors, because despite being heavily concentrated in XRP and company equity, Schwartz still supports diversification. And that might sound contradictory at first, but when you really think about it, it actually makes a lot of sense. Because what he's saying is not put everything into one coin. Instead, he's acknowledging that even though his personal situation ended up being concentrated, the smarter general approach is to spread risk across multiple assets. And this is where his mindset becomes very clear, because he openly said that if you believe an entire space is going to succeed, but you're not fully confident in picking the exact winners, then diversification is simply the rational move. And this is something a lot of new investors struggle with, especially in crypto where hype can easily convince people to go all in on a single token without understanding the risks involved. At the same time, Schwartz also addressed some ongoing rumors that have been circulating in the community, particularly the idea that he is under some kind of gag order after stepping away from his role, and he strongly denied that, making it clear that there is no NDA forcing him to mislead anyone about XRP or Ripple. And that statement alone helps remove a lot of speculation that has been building over the past few months. But here's another interesting twist in the story, because while he says he's all in on XRP and Ripple equity, he also revealed that he has actually liquidated a large portion of his XRP holdings over time. And that might sound confusing at first, but his reasoning is based on volatility. He explained that holding Ripple equity already gives him enough exposure, without needing to deal with the extreme price swings that come with holding large amounts of XRP directly. Now, shifting our focus to the broader market, because this isn't just about one person's portfolio, the crypto space itself is going through some major structural changes right now. And one of the biggest developments is happening with Zcash, which has just completed a golden cross, a technical signal that many traders consider a strong bullish indicator. And this isn't just a weak signal, it's backed by real momentum and volume. Zcash has surged from its accumulation range and is now trading significantly higher, with strong participation supporting the move. And what's even more surprising is that it has started to outperform major players in derivatives volume, even surpassing assets that typically dominate liquidity. And this shows that market attention is shifting, at least for now, toward privacy-focused coins. But while some assets are gaining strength, XRP is currently showing a very different picture, because even though the price might appear stable or slightly rising on the surface, the underlying structure is much weaker than it seems. And the biggest concern right now is declining volume, which is often one of the most reliable warning signs in technical analysis. When price goes up but volume goes down, it usually means there isn't enough real demand behind the move. And in XRP's case, that's exactly what we're seeing. The price is moving within a tight range, but without strong participation. And historically, that kind of setup doesn't lead to sustained breakouts. It often leads to sudden reversals. Another issue is resistance, because XRP has been struggling to break through key levels, and every time it approaches those zones, the momentum fades. There's no aggressive follow-through, no strong buying pressure, just hesitation. And that kind of behavior often signals fatigue in the market, rather than accumulation. Support levels are also becoming weaker, especially as they get tested repeatedly without strong rebounds. And if those levels eventually break, the downside could be sharper than many expect, simply because there isn't much structure below to catch the price quickly. And that's something traders need to be aware of right now. Now let's talk about Dogecoin, because this is where things start to shift again. And surprisingly, Doge is showing signs of life after a long period of low activity. And the key difference this time is volume, because unlike previous rallies that faded quickly, this move is actually supported by increasing participation, which makes it much more significant. The chart shows a clear pattern of higher lows, suggesting accumulation. And with volume picking up, it indicates that new capital might be entering the market, not just existing holders rotating positions. And that's a crucial factor when it comes to sustaining a rally, especially for a meme coin like Dogecoin. However, Doge is now approaching an important resistance zone, and how it reacts here will determine the next move. A strong breakout could open the path toward higher levels, but failure to break through could lead to consolidation or even a pullback, especially with indicators like RSI moving into overbought territory. So when you put all of this together, what you're really seeing is a market that is not moving in one direction. It's fragmenting. Some assets are gaining strength, others are struggling, and even within the same ecosystem, the signals are mixed. And that's exactly why strategies like diversification become even more relevant. And coming back to Schwartz's perspective, it actually fits perfectly into this current environment, because his personal situation may be concentrated, but his advice reflects a broader understanding of market uncertainty. And that's something every investor should pay attention to, especially in a space as unpredictable as crypto. At the end of the day, this story is not just about XRP, it's about how even insiders approach risk, how narratives can differ from reality, and how the market itself continues to evolve in ways that challenge assumptions. And if there's one takeaway here, it's this: conviction is important, but flexibility and awareness are what truly keep you in the game long term.